Good morning, everybody. Hope you're all good. Good to see everybody here. Good to see this room full. So we're here today to discuss onshore and shallow water assets. Africa's onshore and nearshore basin, they hold a vast untapped potential. And in this recent era where we are shifting the interest in the deep water and in gas assets, I think we should not forget about the shallow water and the onshore assets. It is important to understand what are the key pros and cons of these assets, what are some sustainable development models that can help to extend the life of these fields and to maximize their value, as they can be a key contributor to the production of the various countries. We have a great panel today here, a mix of indigenous operators, IOCs, equipment providers, that I'm sure that they will give us their insights from their own experiences globally, but also in Nigeria. So with this, I would like to start with Pambo from Oando. Pambo, considering Oando's footprint in Nigeria, especially also following the acquisition of the onshore portfolio from Eni, in your opinion, what are the unique advantages that indigenous operators can bring, both in terms of managing above-ground risk, but also bringing value in their local economy and in the local communities?
Thanks so much for that question, Ismini. Happy Independence Day to the Nigerians here. Let me know lest I forget. I think the advantage that we have over the past couple of years, we've seen what we like to call an indigenization of the onshore and shallow water space in Nigeria. What that has given us that we didn't have before for indigenous companies like Oando is access to extensive infrastructure. So if I speak for us, we have a gas plant that can process about 1.5 BCF of gas a day. We have over 1,400 kilometers of pipeline infrastructure in 4 states that can be configured very quickly in different ways to get to the Brass Terminal, which we operate, as well as Bonny that NLNG operates. So what this does is it allows us to bring in a lot of third-party production into our system. There's very little, save for thoughts and prayers, that we can do about the global oil market or a lot of discussions I've heard at this conference around climate change and transitioning to sustainable energy. However, what we can control is our costs and our production. So to bring down our costs, we can partner with a lot of indigenous companies now, easier. A few of them on the panel that we'll talk about that we're partnering with already to drive down our costs and then be a lot more competitive. And I think that's what we've seen. That's what we continue to do.
Great. Thank you. Bash, I wanted now to come to you to listen to your perspective on, from your side, how do you make sure your assets are sustainable? How do you control the costs? What are the specific strategies that you follow?
Yeah, thank you very much. Glad to be here. For us, one of the things we've done, also partnering like Bambo said, is actually being able to make profit out of small molecules. So we are the smaller ones. We make sure that we go into partnership that is sustainable, even with our communities. We started actually the PIA campaign before every other person. We were giving 3% of our revenue to the community, transforming the community, and all in our operations. I've never had any community incident. That's one. And secondly, also investing in the people that we work with, making sure that we may not depend on the IOCs, but we are able to pick the nibbles on the street and being able to make something out of it. So that's one of the things we do. And we also watch out for the big bang. So we take advantage of that when we see that.
Amazing. Thank you so much. Berislav, I wanted to come to you, and I wanted to hear from your perspective, from an IOC's perspective, what makes onshore and shallow water assets in Africa attractive from your side? What would be the deciding factor, maybe the parameters when it comes to the valuations that could actually help you to make the decision to enter into a new area, a new asset, or maybe extend your contracts in a region?
Yeah, let me answer, I think, on two levels, and thank you for the question. First of all, I think we at OMV, we operate a number of shallow onshore assets, and whenever we think about adding something in that domain, you're looking at the usual suspects. How much infrastructure is there around? How much subsurface potential is there around? Was it properly taken care of by the prior operator, or was it more a small asset that did not get the same attention as the A teams when IOCs deploy? And you wouldn't believe how much opportunity is often overlooked exactly because of that. And then you start to suddenly see that you have the right ingredients in place, right? We heard a lot of infrastructures there. Then you start to standardize. Then you start to look at those fields, and you can see what you can incrementally sweat out there. There's a lot of value to be extracted from potential onshore positions like that.
Great.
It has to make sense, of course, and it's difficult to generalize, but overall, yes, it can make a lot of sense and a lot of value can be extracted.
Great, thank you. Kobe, we had a discussion, we exchanged a few messages in the last few days, and you wanted to share from your perspective how you have seen that when indigenous companies are taking control of shallow and onshore assets, how this can actually bring more potential and how it can unlock additional resources. Could you talk to us about your experiences?
Yes, certainly, and appreciate the question, appreciate the panel and participating. NOV is an international company, and we are active from the drill bit to the transmission line, so we are very active across that whole food chain. And so we look at this as a lifetime technology partner, right? We sell equipment, we take care of that equipment, we upgrade equipment, we support expansion, debottlenecking. And what we find with the smaller independents is they're not these huge IOCs with these big engineering centers and things. They really need our support. And where we can bring that is early. And that's what a big message we've been sending in some of our presentations and panels is to get quicker oil, the traditional way of engineering, feed, ITTs, that's a long cycle. So through early engagement, we have a toolkit that can bring a number of different options, either from a single well flow line with a subsea pig launcher. We can do seawater treatment topside or subsea. So there's a number of ways we can help. And there's two types of processes really that we're looking at. One is equipment, where the customers go in lower emissions, less people on the vessel, safer, more efficiency. And that is developing equipment. Then there's the automation side, which NOV is one of the world leaders in automation of rigs, automation of process equipment. We have technology subsea where we can monitor and keep an eye on the flexible pipes and some of our other kit. And so we bring that to the table and sit down with the customer and lay that out, and almost like a Lego. We can do it this way, you can put this here, we can put this here. And with our broad experience, we can really lay out an option that says, hey, this is a good way to develop, let's move forward. So that's where we see these smaller players, independents, not smaller. Some of them got a lot of reserves, but that's where we see the value and the partnerships. And that's where we're really focused, is to support them, not only to get the existing assets debottlenecked, but bringing back more oil technologies to do that. So we're very excited about what we're seeing here in West Africa.
Amazing. Thank you. So, Peter, hello.
Hi.
So, you, from your side, you have a proven track record of managing efficiently marginal assets, marginal fields. Can you share some of the practices, technology that you might be using, strategies that you might be using? What is your approach on making sure the assets are sustainable in the long term? Maybe what partnerships you build over time, and what have you learned?
All right, thank you very much, and good morning, everyone. Just for context, Oando is an integrated energy company that started off as a marginal field operator. We started off with our flagship asset, which was a marginal field that had been in production for several years and was no longer economically viable for the international company that had it as a lessee. And we came into farming out into that field some 25 years ago and brought it to production some 20 years ago. We're actually into 20 years of continuous production. When we started off, the start of production was barely 2,000 barrels a day. We've significantly, over the last 20 years, drilled additional wells, and we have taken production from the barely 2,000 barrels per day to 15,000 barrels per day as we speak today. For a field that was deemed to have only 5 million barrels remaining reserves, over the last 20 years, we have successfully extracted more than 32 million barrels from that field. And with no associated gas gathering solution in place, we put one in place, and we have commercialized over 120 billion scf of gas from the same field. Our approach is very, very direct. We started with focused production on the oil to generate the cash flow that we continue to reinvest. And over the course of the last 20 years, we've not only scaled up the capacity of the upstream production, we've also put in a gas processing plant, eliminated routine flaring in 2012. From the same production base, we've also implemented a modular refinery. In each of the last 2 years, we've delivered almost 300 million liters of refined product into the market. And we've leveraged all of this with local indigenous workforce. What we've tried to do is to recognize the constraint that we had from a capital point of view. So we're lean, we're efficient, we deploy technology, we try to cut out the lead cycle for contracting and procurement. We're very strongly focused on execution. And we leverage smart technologies that allow you to be able to predictively intervene, extrapolate what will happen, and make the necessary interventions. And we've done this in a very focused way just to continue to build scale. And we've also done this in partnership with others. We started off by leaning on adjunct infrastructure belonging to others in order to achieve our production objectives. But over time, we've then had to scale up. And the sustainability of our business is built on 3 key pillars of robustness, which speaks to the integrated play, redundancies. We've curated many multiple parts in our operational setup to different markets just to make sure that as market fortunes fluctuate, we continue to reach different markets via the redundant parts. And the last one is resilience. And that resilience speaks not only to the setup of our operational footprints and assets, but it also speaks to a core DNA of our people in the way we run the business. So those have been how we've played the game over the last 20 years.
Thank you. You touched a bit on the technology aspect, on smart technologies that we use. And I wanted to ask Bambo, from your side, can you give us some examples of how you use technology to manage above-ground risk, how to monitor onshore operations? Because this is one of the key risks when it comes to onshore assets, especially in areas where potentially there is no support from the regional communities or there might be some challenges. Could you comment on this? I think it will be very good to have your insights.
Thanks so much for that, Ismini. I think it's a great question because normally when we talk about technology, we're talking about the sort of technology that Kobe has spoken about earlier that NOV does. But in our environment and your specific above ground risk, the sorts of technology we're looking at is to monitor your pipelines and flow stations in remote areas. So where we at Oando are doing a lot of that. We're utilizing UAVs, for example, to monitor the pipelines. This is also great for looking at what's happening with our environment. So we can also spot some environmental degradation and intervene there. Bash spoke earlier about the work that we did with host communities. We actually partnered with Energia in that asset in 2008. We were able to launch the first host community development trust that later evolved into what's in the Nigerian PIA now. And in partnership with the communities, I want to link that up that it's not just using the technology to see what's happening, because we have a mix of cameras, UAVs, we can actually see what's happening in our remote locations. But you also have to have a very great partnership with your communities such that they can assist you to respond. So it's responding to resolve whatever the issues are. That's where we've seen the advantages of mixing the technology also with the advantage that the indigenous companies have of speaking the same language with the communities. So there's nothing lost in translation. A significant amount of our employees are from these areas. So it's 100% Nigerian, and we're able to speak to them in a way that they're willing and interested in helping us. I think that's what we've done.
Great. So apart from the technology, the human factor is key in this. And Barry is very passionate about collaboration and about building partnerships. So would you like to tell us from your side what are the key ingredients of good partnerships from your experience and what is key in order for things to move forward? You mentioned yesterday about sharing success, which I would like to hear more about. So could you tell us?
Yeah, thank you for the question. I think across the globe in our industry, collaboration is a fundamental scheme, right? And we at OMV, we really believe that you have to find a partnership model that allows for at least a double win, if not a triple win or a multiple win across that spectrum, right? It's very difficult otherwise to work together. It's very difficult to come and stay for a long-term investment otherwise. And when we go out, I think it's really about ensuring that partnership also works on all levels. And what I mean by that is it starts usually with a host government. You come to a country that has resources, and I think that partnership with the host country has to be working properly. There's a couple of ingredients that are necessary there. Transparency, reliability, a solid fiscal system, limited bureaucracy, all the buzzwords that I think we've heard also across the past 2 days here on the African Energy Week. I think this is not the first panel that brings the necessity of these things up. Yeah? But then it's also, you know, with whom do you partner among your peers? Yeah, you want to operate, you want to non-operate, who brings what type of value to the table? And for me, it's perfectly fine to sometimes say, no, I don't need to operate if somebody else has a better skill set, and I just simply see that more value can be extracted that way from an asset. That's perfectly fine. But let's please make sure that we then have the right mechanisms in place that at least important things can get discussed. Yeah? Or that we provide some, you know, QA, QC or technical opinions on something that the operator is doing that will help all of us to make better decisions at the end of the day. So that's with the operators, right? And then I think the third piece is you partner a lot with local communities, with the local supply chains, with the communities where you operate, etc. There's multiple levels. And if you manage to fit and really make win-win combinations across all of these different dimensions that I just brought up, you're pretty much set up for success. And again, I can bring the example, we're now 50 years in Northern Africa. We're 50 years in Libya. We operate in the east and in the west of the country. We have offices in Tripoli and in Benghazi. And we're very welcomed by all these levels, and people just want us to stay and do more, yeah? Because it works. Because that partnership and collaborative approach works for everybody. And I'd like to replicate more of that, huh? Also in other places in Africa.
We're hoping to see more. So I would like to change slightly the subject. I have a question for you, Bash. We discussed about raising capital, that funding and raising capital, depending on the size of the company, depending on the region that they operate, could be challenging. So could you tell us a bit more about what is your approach to this? What are the mechanisms, the models, the instruments you use? Maybe even what can be the difficulties and how you overcome them?
Yeah, thank you very much. Raising money for smaller companies is extremely difficult. And so one of the things you'll notice going abroad to raise funds for us, because we're not known, we're not the IOCs, there is so much demand, and also because of the energy transition, there is also the responsibility of ESG, even though we have mastered the art of social responsibilities, but the reporting and the financing part. But what we do is to make sure that the partners that we have, we earn their trust. So we invest in the partnership because that's a guaranteed source of income and investment. So what we do is to make sure that the few ones we have, we invest in that relationship and we earn trust. And we are able to even use them as a leverage to be able to get more things. The other thing is the Nigerian banks. They are actually approachable, but it can be expensive. So if you look at the dollar on it and the investment, you're bleeding to the bank. But I'm really hopeful that the African Energy Bank that I started in Abuja is able to come into it. And also, the strength behind the IOCs, apart from their individual strength, is also their collaboration, like you said. You see them coming together to do businesses, even in Nigeria and other places. So we're hoping that the next phase for the indigenous and the smaller company is all coming together to pull funds together to share the risk and to also take advantage of our strength. And so that's what I'm hoping. Thank you.
Great. Bitte, I think you have some very interesting stories in terms of how you started, in terms of raising capital and reinvesting and building some good partnerships with partners. Could you share a bit more from your side?
Yeah, absolutely. We've gone through different cycles in Aradel of raising funding for our operations. It started off with seed capital from what you would call family and friends. But the target was also very clear. Go for mature near-term production whose cash flow can then become the basis of leveraging additional borrowing. And the Nigerian banks have done excellently well. The Nigerian banks have provided the initial set of debt capital that has kept us going. And what we did was just to continue to reinvest that and build a broader base of cash flow that has formed the basis of targeted funding. At some point, we came to situations where we then had to subscribe to syndicated funding across multiple banks. And in the course of our journey as a company, while doing that, we then continuously worked our way towards getting onto the main board of the Nigeria Stock Exchange to be listed. We've not had a difficult journey in raising capital. And I think what our experience points to is that capital flow comes to you when there is some level of comfort and assurance. Mm-hmm. And that assurance manifests itself in the perception around your corporate governance. The more we kept raising the bar of our corporate governance in terms of accountabilities, in terms of reporting, in terms of disclosure, and adherence to best practice, the more we found ourselves being attractive for lenders of capital. But then also the bankability of your next investments and the track record you have achieved in the execution of previous spends are all factors that come into that basket of making you either attractive or non-attractive to lenders of capital. For the indigenous space in Nigeria, the Nigerian banks have done excellently well. But I think collectively as an industry, we're getting to a point now where the balance sheet, the collective balance sheet, and the single obligor limit of the banks are proving to be insufficient. So what we now see is increasingly more participation from traders. Traders are now bringing in capital in addition to what we have. And there are many independent and indigenous companies today whose operations are being funded by traders in exchange for a long-term offtake agreement. So that's been our journey. We strongly believe that our sector still remains hugely attractive to private capital, whether it is debt capital coming from banks, whether it is targeted capital coming from traders. And we are now increasingly also seeing some cross-border financing coming in from the Middle East and from other jurisdictions looking for entities that they feel comfortable with to fund their operations. So that's been our experience.
Great. So all positive, all movements to a positive direction. Some of the fiscal and regulatory changes we've seen in Nigeria recently, it has been the introduction of the PIA in an attempt to attract more investment, to encourage gas developments. So I would like to hear from you, Pambo, what is your take of all these changes that we have seen recently, whether it has helped you from your side to make decisions faster, and maybe even if you can elaborate on the specific elements of these changes that have actually helped you in realizing the company strategy.
Thanks, Ismini. I think when we talk about the PIA in Nigeria, it's very interesting. Many people know that it took us over 20 years, I believe, to pass the PIA. So for some of us, we still accidentally call it the PIB because it was a PIB for a long time and with multiple evolution before it passed. During that time, the uncertainty is of knowing what the fiscals are, what the law is going to be, made it quite difficult to raise capital or to even carry out any major projects without knowing what the profitability would be or could be until the law was passed. Now, since the PIA passed, we've had the kind of stability that's allowed investment into the environment. Specifically in the indigenous space, you've seen a lot of deals close since then. The indigenization I mentioned earlier happened after the PIA, where companies like ours, Oando, and others have been able to take over operatorship of what were previously IOC-operated assets. Also, the clarity around the host communities and the trust fund has also helped, and like I also said, speaking the same language. Now, where our environment has been a bit different is when I say that to operate in Nigeria, you have to know how to balance on shifting ground. So gracefully nimble. We have to be gracefully nimble. The experience that we've had in managing and producing marginal fields in very creative ways is something that we're now able to bring into much larger assets with large infrastructure that we have to operate. So it's been a bit backwards, and we've seen all the success. Bete spoke earlier about Aradel's marginal field that's operated long past what previous IOC would have called an economic limit with the same reserves. We've had the same experience in our marginal fields, and we're bringing that experience now to practical application in a much larger asset. Our asset spans 4 states. We're able to bring in a lot of third-party marginal field indigenous operators to produce through my assets. I'm able to do more creative things like process gas for them or even your crude and get you to the terminal. These were things that we've had to learn to survive as marginal field operators, and now when we bring that into a larger space, we can break the asset down into little pieces and then optimize those. So that's what we've done. The PIA has empowered us to do that. It's broken up the industry. What would have previously been a huge integrated IOC-operated corporation can now be broken down into the midstream, the upstream, within the same asset. And that way you can manage and optimize separately in collaboration with your partners. So that's what we're doing.
Great. Bete, would you like to share with us your take of the PIA? And maybe share some further. You mentioned to me yesterday that it's definitely steps to the right direction.
Thank you, Simi. The PIA is a welcome development for us. Mm-hmm. It has helped to reset the direction of investment in the oil and gas industry in Nigeria. Prior to the PIA, the Petroleum Act that we had, which moderated and regulated the industry, was more focused on oil. What the PIA has done is to bring an equal balance of emphasis on policies and fiscals to underpin the midstream gas and downstream gas space. So today there is certainty. Prior to the PIA, we didn't have fiscals around deep water gas. Mm-hmm. We didn't have fiscal around PSC gas. Today there is certainty. And the PIA has helped to ensure certain levels of stability in terms of expectation, in terms of fiscal modeling of what your investment would be, and that's a huge relief. In addition to that, prior to the coming on board of the PIA, we had no standardized methodology for managing the settler and lessee relationship. What we have in the PIA now is a codified arrangement around how the host community relationship and the operator will be managed. And I think it's kudos to the PIA that subsequent to the passing of the PIA, we've seen equal and seamless transfer of assets from international oil companies to indigenous players on a scale we have never seen before. Last year, well, between last year and this year, the current administration of President Bola Tinubu has approved 5 major divestments that have reconfigured the operatorship of assets in the onshore space in Nigeria. The PIA enabled that. Is the PIA perfect? No, it's not. It's work in progress, but it's a fantastic start to play off from.
Thank you. Thank you for sharing your views. So we have 5 minutes. We should, unfortunately, slowly be moving towards the closing remarks. I would like to start from Kobe. Mm-hmm. I'd love to hear maybe some examples, maybe globally from your side, on specific technologies that you have used, which in combination with the right fiscal framework can help in the long-term sustainability of onshore and shallow water assets. And maybe your thoughts on this panel as we come to a close.
Yes, thank you. And it's been a great discussion, really learning a lot sitting here listening to these gentlemen. So, as I mentioned earlier, NOV is a technology provider, and we like the partnership angle because the partnership angle is initially it's tough, right? And the cost may not be as where you want them, but as you work together, you standardize your fields, you standardize your development, you standardize your equipment, gets more and more cost effective. And I think that's where the partnership really brings value. The other point in terms of technologies, and when you hear technology, you think higher prices. Well, that's not really the case, and the technologies that we're looking at are going to bring prices down through subsea processing or drilling more efficiently so that you can drill a well in a few days versus weeks. And so we think that's where the future is. And the last comment would be, we see a lot of operators, 3 bids and a buy, go with the lowest price. And field starts up, 2 years in, they're buying new equipment, right? So I think the message of this total expenditure, where it's not just the CapEx, it's the OpEx, and the efficiency and the uptime. So if you miss 2 days of oil at 30,000 barrels, you've paid the difference up front. So I think there's a balance there that we see this, hey, we want lower cost, but you need to think about the long term and your operation of your field and the people that are backing up the equipment, the financial strength, their global footprint. We're around the world. We can get people to these places immediately to support these projects. So partnership, thinking total expenditure, technology development to improve cost, not raise cost. So a really good panel, and I appreciate that.
Thank you. Peter, you're probably the one who will need to escape first. Some last thoughts before the end.
For us in Nigeria, the onshore and the shallow water terrain represents a huge opportunity for achieving short-term incremental growth for our country, who is largely dependent on that in carrying out its duties. But it also represents an opportunity for indigenous players who have indigenous solutions to the tensed above-ground issues that we have. And the landscape in Nigeria today, over the last 10 years, we have seen operatorship of those spaces moving from 3% contribution by indigenous players to 50% today. It's a new vista for us. It's one that we're embracing, and it's one that we believe holds a lot of promise for the strengthening of our industry.
Thank you. Barry, any last thoughts?
I think the one thing, just to comment maybe a little bit on that Nigerian situation that we have heard today. I mean, my first reflection was I found it extremely impressive to see that the indigenous companies produce now more than the IOCs in the country. It's not really a globally known big fact, but it happened silently over the past years. And it just talks about basically a couple of things, but speed at which the industry is maturing. Also there, the speed at which local supply chains are being redesigned in order to allow that type of growth. And I think, again, collaboration, as we said earlier, is going to be key to successfully unlocking that. We're not yet in Nigeria, but be happy to have some discussions. Plus enormous gas potential, right? I mean, some people talk about 200 TCF, etc. It's a significantly attractive country that, yes, has high demand on its own, but vast resources that still can be tapped and that can help both domestic energy resilience, but there can be also product for export and other markets available. It's a fantastic opportunity, so it's great to hear what colleagues are doing here on this panel.
Thank you. Bas?
Yeah, thank you. Permit me to use the word, our company is the Nigerian dream, making the impossible happen. We took a small impossible field, and we made it something profitable and something that is still sustainable. We see a bright future, We are excited to go into it. We celebrate our partnership, and we hope to get into more. We want to come back and continue to celebrate the indigenousness of Nigeria in a company like ours, hoping to do something better. Thank you.
Great. Too many more successes. Thank you. Bambo, last but not least.
Yeah, thank you. The hydrocarbons are there in Nigeria. The technical expertise is there. We're not new to this. In our case, and in a lot of indigenous companies' case, the infrastructure is there. There's probably very little we need to do to connect new players. So we are aggressively optimistic. We've agreed gas is a transition fuel. We have lots of gas, a whole lot of gas. We have domestic markets. We have export markets for gas. So for us, we're looking into the future, and we're very happy. The challenges are challenges that we're ready to face and able to overcome.
Great. Thank you.
Thank you.
So the challenges are there, but everybody is ready to deal with them and resolve them. Thank you. Thanks so much.
Thank you.
Thank you.